All right, here we are, Brian Gahsman from beautiful and hot and sweaty Minneapolis. Do I have that right, Brian? Is it as hot up there as it is here in Nebraska?
Believe it or not, yeah.
No snow and ice. Rest for the
No,
weary. Well,
no.
Brian, let's dig in. So this is I wanted to reach out because every time someone mentions automation or AI, we get all excited, right? As an investor, you have to participate in automation and uh, and the AI movement in general. But I wanted to talk about it in the context of M&A. So this quarter, we've seen a lot of mergers and acquisitions taking place in the robotics and automation space. Give us some color and feedback about this. Why is this happening, and what can we expect in the short and medium term here regarding mergers, acquisitions, partnerships, deals in the robotics and automation space?
Yeah, sure. So, yeah, there have been quite a few this year. It's kind of a multifaceted answer, though. So, one of the reasons why, especially in the robotics and automation space, is there are a lot of smaller companies out there, and they are vendors, if you will, or providers to some of these larger automation companies. So if you think about a company like Synopsys, okay, so they basically automate the semiconductor production process. And so with their automation system, they rely on, different sensors and parts from different smaller companies. But now over the past, let's say, year, with interest rates increasing, the cost of capital increasing, and a second layer to that also is those companies that are public, but don't necessarily have earnings, but they have revenues. They're still service providers to the larger automation companies. So when you see some of these go down 60% from their highs a year ago, and they're trading at book value, if not just the value of their cash on hand, for God's sake, um, then why not? Well, why wouldn't Synopsys just go ahead and buy Silicon Frontier Technologies and just bring it in-house? And it's besides them, I mean, we have Infineon, which is basically the German version of Synopsys, semiconductor automation manufacturing, which has had multiple mergers or acquisitions actually this year. And then ATS out of Canada. It stands for Automated Tooling Systems, but I think that they just changed it to ATS to be simpler. But they've had multiple acquisitions this year to date, but they're doing the same thing that I explained. They're just buying out the guys that they're the manufacturers for their specific process chain at very great multiples. And that is also helpful to those smaller companies because, yeah, the large company gets to buy the small company for a lot cheaper valuation right now. But at the same time, the smaller company may have not been able to handle all of the increase in cost of capital. So instead of going bankrupt, they get to survive or actually, make it through. So it's really all this activity that we're seeing right now that's kind of what it's related to. Especially in the semiconductor area, whether it's automation or any of that, we're going to see a lot more of that going forward. But then paired with the increased cost of capital and these companies' valuations it's a yard sale.
So does that so if cost of capital keeps going up, small companies are getting gobbled, so to speak, by their number one vendor or their number one partner. What does that mean for the dynamics of the space going forward? Do you want to focus on these pure plays as you speak? Is it better to look for bigger companies? How is that going to impact you as an investor, the way you think about things going forward?
Right. Well, I mean, as Synopsys as an example, they're a pure play. They literally automated the semiconductor manufacturing process. It's just that historically, a lot of these names, as this space grows, I mean, I've been doing this since 2013, following the robotics and automation space, and it has grown significantly. So we have seen over the years, a lot of these companies, even the majority for a while, didn't have earnings. They had revenue, no earnings, and these were smaller companies. But now, some of these actual main players, pure plays, through these acquisitions that they're doing, are becoming large companies, large players, and you'll see a shift in market cap of the overall fund over time because these companies are becoming larger. Now, I prefer organic growth as a growth through acquisition, but I mean, either way, that's what's happening right now.
All right. Well, let's change gears for a second. We got to do on your newsletter, and what everybody's talking about is NVIDIA, AI. This is the way we're supposed to go. This is the way of the future, I keep hearing. You said specifically in your newsletter that AI, artificial intelligence, is changing the world. The world has changed. What do we make of this? What are we supposed to think about it? Valuations to me seem crazy and cuckoo land, but we've seen this run for a while. What is your prognostication about the validity of investing in AI and how long this might last? And if it's something, as an investor, should we be aware of it or afraid of it or what?
Well, first of all, I think market's a little bit ahead of its skis on this. Any company with AI in the name, and why not just change your company name to something .ai right now? Because you're going to get a lot of inflows. But you need to be careful. I mean, back in the internet boom, right, back in 2000s, now then kind of the PC, everybody had a PC in their house. And so that's what really when the internet became more popular because people wanted to be able to use PayPal or shop at home or web searches or Amazon. So the adoption of the PC in the home was what drove the internet. Boom. This is different. In this situation, the cycle starts from, so we have this advanced AI, right? These large language models that take an incredible amount of computing power, right? So if you stand back and think about this logically, stage one, hardware. Companies are going to have to update, Microsoft, Google, everybody, they're going to have to update their servers. They're going to have to update all of their chips to be able to handle the processing power that these large language models are going to demand. So stage one, looking at investing in AI right now, is look at the hardware makers and the chip makers and the NVIDIAs. And then once we go through that cycle, then start, picking out all of these actual AI software models if they've not already been purchased by the bigger guys. So, I've said in the past in this fund, because I try to keep it a pure play robotics and automation fund, but originally NVIDIA was just making graphics cards that gamers that like to play on their computers at home, they'd have to have the new NVIDIA graphics chip. That's what they were not too many years ago. Now NVIDIA has chips for these algorithms and large language models. So before where I'd said, no, I'm not going to invest in NVIDIA in the fund. Well, now they are a component that goes into robotics and automation systems. So, I've kind of revisited my opinion on that now because they have expanded into the space. And we buy sensor companies, we buy drive companies, everything that goes into the robots and the robot. So NVIDIA's a great company. They're ahead of the pack. I think they gave very clear guidance last quarter, and it was a stunning earnings call. But I don't think that you can expect that to happen every single quarter going forward because there's also capacity issues. How many chips can they actually make? So I think NVIDIA is a great company. It's going to be there for a long time, but that's more of a value investment, in my opinion. I might be the only one out there that would even say that. But I think it's more of a value investment at this point. And I think a lot's been priced in this year very quickly. So that's my opinion on them. But I also look at some other these AI companies that are very interesting. I mentioned in my write-up SoundHound. Right? They were kind of a digital media or digital music company for a while, but they've expanded their large language model, and now they're on the Cisco server partnership. And SoundHound is going to be used every time you pull up to well, maybe not you, but people that go to McDonald's or Taco Bell or whatever. They're going to be using that SoundHound language model. So doesn't have to be a person waiting in the first little booth taking your order. And so that's huge if you know how many fast food restaurants that there are around. So I found SoundHound to be very interesting because there's a use case right there. It's somewhat easy implementation, and they're basically their partnerships with Cisco, some of these large cloud companies.
Mm.
So I like that one. I also like their revenue growth. If you look at their revenue growth, it's double what NVIDIA is expected to be.
Mm.
And so that's something when I tried to pinpoint and pick out and hand select these AI companies that I wanted to be involved in, which there's only like 3 that passed my filter. And then you have, Symbotic, which is the warehouse automation, right? Using their proprietary AI, but it's phenomenal AI. So, but Symbotic's up over 300% year to date. It's up over 30% today alone. So that's another good one that I hand selected out of them. And last one was Fiscal Note. It's kind of a governmental and corporate data aggregation AI. They've got deals with the Department of Justice, Homeland Security, NSA, also with Chevron and some of our largest Fortune 500 companies. So that alone, that with all of those strategic partnerships, those don't go away. So those were the 3 AI stocks that I actually selected.
Yeah, those are good. Do you have for that particular sector, what are we looking at from a PE perspective? Is there a reasonable target? Is everything up in the air because nobody knows? Any insights you can share with investors along those lines?
Well, the majority of the software companies, actually the AI companies, they don't even have earnings yet, so we don't have a PE necessarily. So that's why you have to look at revenue growth. And
Okay,
that's how I'm selecting these, basically on revenue growth.
gotcha.
Anything over the expected revenue growth of NVIDIA, I'll look at it.
Yeah, that's a good one. Well, let's round it up with one other one that you had mentioned that I think is really interesting. Let's talk about Intuitive Surgical. There's some interesting stuff going along in their neck of the woods and in the biotech and medical sciences in general. What's been on your mind regarding Intuitive Surgical and what you see at this time?
I think Intuitive Surgical has obviously done great. It's probably one of the most well-known surgical robotics companies. But they didn't get where they are today by selling millions and millions of their Da Vinci X surgical robotic system for $3 million a pop. Their business model was, okay, they're in hospitals all over the world, but their razor and blades model is what it's called. And so when you do surgery or their laparoscopic or any other surgery on a human with these tools or these robots, you can't reuse the equipment. You can't reuse the catheter. You have to use a new one every single time you do it. So with Intuitive making their own razor and blades themselves, constant replacement, hundreds of thousands of surgeries happening all the time, that's a huge stream of revenue, almost more than the actual selling the robot itself. And Stereotax is another surgical robotics company. They're looking to get their proprietary catheter put on the market, or at least get their CE mark this year, submit for FDA approval this year. But they're following the same model because you're only going to be able to use that catheter once. So selling their Genesis robotic system is one thing that's great. Also reoccurring revenue from the catheter. Not to mention there's somebody from Intuitive Surgical on the board of Stereotaxis. So
Gotcha.
surprise by their models. Similar.
Simpatico. Yeah, no, these are 2 interesting areas. Like it's an inelastic solution, that's for sure. Surgeries will always be in high demand. Well, Brian, you covered a lot today. Thank you for all these good insights. And we always love when you drop names on us. Some we've heard before, some are new. Go check out SoundHound. That's going to be an interesting one for me. But thanks for your time and for answering the back call. And we'll be in touch again soon with more insights. Appreciate it, Brian.
Absolutely. Thank you very much.
Man. Have a great day. We'll talk to you. See ya.
Bye.